Let me first start with the economic forecast. We see a very significant and sharp hit to growth over the next couple of quarters. We compare our base case outlook to some of the base case outlooks out there in the marketplace. We're a bit more constructive in terms of the degree of the economic shock. We do believe that towards the end of this year, at least in the base case, this virus begins to get under control. And in the process, we see some form of U-shaped recovery with perhaps positive growth again later this year. This is a very, very unique shock. You've seen this reflected in negative price action across nearly every segment of the financial markets on a global basis. But the good news from a fixed income markets perspective is that we see some type of stability off in the distant future. This is very, very different than the global financial crisis, where you had a banking system that needed to be recapitalized. You had tremendous amount of credit risk across the system, a shock requiring massive changes to the regulatory structure. And when you look forward in time, it was deeply uncertain in terms of where we were headed and how long it would take for the economy to recover. And in the fixed income markets today, when you look at spread levels, many high-quality sectors have widened out to extreme levels, which should benefit even before the economy recovers. So it doesn't necessarily have to be more complicated than really focusing on these sectors that we believe should be resilient from a credit perspective and should stabilize well ahead of any actual recovery in the economy. And today, PIMCO across strategies is operating with a significant mindset. Preserve capital, maintain liquidity, which allows us to be flexible in maintaining the best positioning on behalf of our clients, and understanding what risks are appropriate for different strategies. What we're doing today is fine-tuning, using techniques that are somewhat tried and true to manage through these periods of volatility, to maintain that flexibility, to preserve, and then to be able to participate in the recovery that we may have begun to see over the course of the last few days, at least in the high-quality segments of the market.